This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Friday morning and end of the week, and markets pretty much at the high point of the week, high point actually of the last fortnight or so. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning. Morning, Nigel. It's the last day of the week, right? And it's been good so far. I mean, given all the bad news thrown at the markets, it's still at a 1 month high, and there's been buying on dips.
Yeah, that's right. It's a Friday. What are plans for the weekend, guys?
Well, still formulating. Editors roundtable, right?
It's a long day.
I thought you guys would say watch Jawan. No? I'm looking forward to that. I'm looking forward to the US Open as well.
I've heard Jawan is
I mean, if it
expected to be really good.
If it does 75 crores, then, you know, as the screen is telling you, it's a bull market. The screen is telling you this is a blockbuster hit. 75 crores in a single day, and you still have 3 more days. So
actually,
and it's Shah Rukh Khan, right?
Yeah.
That's not a bad idea. Jawan is perhaps.
What about the US Open? I thought you'll be tracking that.
I will. I mean, I think who's playing?
Shelton is playing against Djokovic.
Yeah. And he's looking very good.
I'm going with the underdog, and he's playing at home. Maybe he can do what Andy Roddick did 20 years ago.
Will he do the phone signing?
Yeah, I love it.
All right, well, let's just quickly take you through what you need to know as we begin another trading session. You've got the Nifty yesterday, which had a very positive and constructive close, right? We basically ended above 19,700 or so, and that's about 0.6% higher. You know, I'll tell you the significance of this in just a bit. We've been mentioning this 19,700 level for the last many days, and finally we are above it, and it's a decent close above it. Overnight, and for what it's worth, once again, it's a bit of a, you know, a lower session. Equities on your screen. Actually, the Dow ended higher, but the S&P was down, the Nasdaq was down the most, and you also had the Russell 2000, the small cap index, which was down 1%, a full 1%. So it was more down, and it was a equities down day. Dollar index is closed above the 105 level. Traditionally, typically over the last many years, dollar going up is considered bad for emerging market flows, emerging market equities, etc. But we find ourselves in a different kind of a situation. We can talk more about this. Fall in weekly jobless claims, which is the latest data which we got last night, is once again kind of stoking inflation fears. It's actually not just the jobless claims, but yesterday morning we were talking about the ISM services. Services inflation is sticky, and the ISM services saw a surprising rebound. So that combined with this jobless claims data shows that the labor market actually is pretty solid, and that is once again kind of reigniting fears that maybe, you know, there is more for Fed to do, maybe not immediately in this month when they meet, but perhaps later on. We got, you know, the big stock in the US market, which is Apple, which has been under pressure for the last 2 days. But that's nothing to do with the broader market, but it's lost 6% in 2 days. And that's the reason why the Nasdaq is underperforming in a big way. China it plans to, and this was reported overnight, plans to broaden its ban of iPhone usage, not just from ministries and government offices, but to state-run firms and agencies, etc. as well. So it's sentiment impact more than anything else. In terms of absolute numbers, they won't amount for much, but it's a sentiment. Brent oil, it's cooled off a little bit. I mean, oil's been the big one, but it still trades just under $90 odd. It was knocking 91, but just under $90 odd now, which is still very high compared to where we were about a month ago. But the market here has kind of looked through all of this so far, at least. Now, let's come to the Nifty and levels, etc., how they tie in. So the Nifty closed above the 19,700 level. It's a 61.8% retracement of the entire fall. So that's the sort of first number to watch out for. The all-time high, I would say, which is 200 points away, a little over 200 points away, is not 9991, but one is missing, but 19,991, which is the next logical target for the Nifty. Use 19,500, which is around yesterday's low, as a bit of a support in case you know, you get dips, etc. You know, buying and dips always the more advisable kind of game plan here. On the Bank Nifty, we've got some levels coming up. We broke out of the falling channel. We got a decisive close above the 40-day exponential moving average, which is was something we've been pointing out. On the way up, it's the retracements. The 50% and the 61.8% retracement of the fall from the July 20th high to the 31st of August lows. And the numbers are up on your screen. 44,985 and 45,312 on the way down. Use yesterday's lows of 44,207 as a bit of a support area. So that's the levels, but it's been super, super strong. And I would say almost we've got a thick coating of Teflon, right? Everything which has been thrown at the market's moved on, shrugged off, and kind of it's inching higher, it's moving higher. Directionally, it's looking pretty good. Mid caps and small caps, they took a break day before yesterday, but they were back up again, 0.60, 0.75% gains on both those two indices yesterday as well. Sonia.
Absolutely. I totally agree. And we were making this point earlier as well, right? Yeah. How give and take everything. This is a buy on dips market. People are choosing to jump in and take every opportunity they can. But before that, it's crazy what's happening in China with Apple, right? Yeah. I mean, earlier they restricted people from bringing iPhones to their offices. Government officials can't bring their iPhones. Now they're saying they're going to extend it. Apple has wiped out $200 billion of market cap in just 2 days because of this. I mean, it's really random. So, and it's interesting to see how this plays out as well. And that's, of course, the big global headline.
It ties in, Sonia, with China did the same thing with laptops, foreign-made laptops again. I mean, it's basically the entire thing. I mean, US is restricting export of high-end chips to China. Yeah. China is saying we're going to build our own chips in a very large way. So it's.
But imagine people who pay so much to buy that iPhone and then you can't even take it off it. What do you do all day, right? But okay, anyway, this buy on dips is something that does continue. And yesterday our markets closed at a 1-month high. It was the 5th straight day of gains. And what I really liked about the market so far is that it's been led by large caps. So whether it's L&T, HCL Tech, ICICI Bank, there's buy on dips and it's seen in the large cap arena, HDFC Bank, etc. Now, the mid-cap index is at a record high, so there's plenty of buying action there as well. However, the flows just for yesterday have thinned out a bit. So you have the FIIs that sold about 750 crores. DIs barely bought about 30-odd crores. The US markets, they closed mixed, but the Nasdaq was under pressure. And for the week, most US markets are under pressure. So you have the S&P 500, which will end the week about 1.5% lower. Of course, there's a lot of Fed speak over the next couple of days and weeks, and hence the market is a bit tentative as we head into that US Fed, reserve event on the 19th and 20th of September as well. The Asian markets also not looking that great. The Hong Kong markets are not trading today. The Japanese markets are under quite a bit of pressure because the economic growth was slower than what the street was estimating. So by and large, it looks like it could be a little bit of a slow start from the global perspective, but for our own markets, things have been very strong. So let's see, maybe that buy on dips continues.
Well, absolutely, Sonia. The trend is up, so you need to participate on the upside, irrespective of what is being thrown at the bulls. Well, they are battling and they're charging towards it. So you need to, the screen is telling you that it's buy on dips. And if you saw yesterday, the Nifty did pretty well, but the Nifty Bank, the intraday chart should tell you the picture. That, in fact, was the big booster shot that we got midway through the trading session. You thought, well, it's underperforming. But that came back to the party and it did very, very well. There were clear signs of short covering on the Nifty Bank, by the way, because it gained more than 1%. And in fact, the open interest was down by close to 2.5%. So short covering is what played out on the Nifty Bank. While on the Nifty, there continues to be long addition. There are a couple of cautious sides with the VIX moving a little higher, the PCR moving at the higher end of the range. But just going by the screen, you'll have to say you need to stay long on this market. And the Nifty Bank, for the first time in 8 sessions, we have an outperformance coming in from the Nifty Bank. It conquered the 50 DMA as well on the closing basis, so it took out that crucial level. What are the FIs doing? Well, yesterday there was a swing of close to around 17,000 contracts. How do I say that? They added 9,000 long contracts and they covered 8,000 short contracts. And now the long positioning has gone to around 57%. I'll tell you what, since the 27th of July, we haven't seen the FIs be this net long on the index. So that's an important point. 57%, they're expecting the markets to move up from here on as well. And on the option side, well, on the Nifty, 2 strikes are important, 19,600 put and 20,000 call. Out of the money call buyers, they're saying maybe, in fact, the Nifty is going to be making its way to around 20,000 odd. So take a punt, pay 10 rupees odd, and maximum you lose is around 10 to 12 rupees. But on the downside, 19,600 did see 40 lakh shares getting added. The rough premium there would be close to around 50 rupees. So you deduct 50 rupees from that 19,600. 19,550 is important on the downside, and you have the 50 DMA that comes in at around 19,500. So that's a crucial support zone. On the upside, well, it's 20,000 is what the bulls are looking at. And since the Nifty Bank found its form yesterday, the next level of resistance comes in at around that 45,100. That's from where the Nifty Bank did a U-turn. In early August, we hit that level, and then we went down all the way to around 44,000. So that 45,100 is important. We have conquered the 50 DMA. That becomes a bit of a resistance zone. If you break that, then maybe the 100 DMA comes into play. But you'll have to stay long on this index. The GIFT Nifty is suggesting 20-25 point uptick. Stay long, trail your stop loss, and 20,000. That's what the bulls want. So let's see how soon we get there.
Okay, well, that's basically what all you need to know in terms of the overnight session, the positioning, and the trade setup.
It's interesting we talk about the markets sort of by the hour, but if you look at it from a broader perspective, we are not even 2% away from that 20,000 mark yet again.
Yeah.
Just back at lifetime highs yet again. So I guess the bulls...
I forget, did we hit 20,000?
No, it was 19,999.
19,992 was the all-time high.
992, okay.
8 points away.
Well,
but let's not talk about the Nifty Bank. Portfolios are feeling so good.
Yeah.
The real party is
Mid-caps,
in the mid and the small cap space, right? They have got their
I think
dancing
Nigel wants to jive a little bit. I mean,
Nigel's in Friday mood
That's
today.
later this evening. It's September, always a good month for me.
All right, well, let's quickly tell you what's lined up here in the first half hour of the show before we go any further. Markets across the globe and global sort of views coming in. Rana Gupta of Manulife Investment Management will be with us. Our research team brings you the top stocks to watch out for in a bit from now. And our fundamental stock analyst is Gurmeet Chadda this morning of Complete Circle. And he'll be with us at 8:30 a little later.
Well, let's begin the day on the equities front. We have Chris Wood at Jefferies, and very important comment coming in. He says the first Physical Asia Forum in Hong Kong is this week. Greed and Fear observes the long-term conviction amongst Asia and emerging market-focused investors that China remains a structural underweight in equities and India is a structural overweight. So he's bullish on India. He says still tactically there is a widespread acknowledgement that India has already done well in the near term, while the possibility of a renewed period of China outperformance is rising.
Okay. Just to continue on equities, Aditya Suresh of Macquarie says that India's relative valuation against other emerging markets remain expensive even as its EPS growth and ROE premium is in line. They note a strong correlation plotting MSCI India against rolling 2-year forward consensus EPS. The current index levels appear more palatable following consensus EPS upgrades post-June quarter results across sectors like financials, discretionary, energy, healthcare, industrials, and as we roll into or onto a higher base.
Okay, let's also get you some money market views. Lakshmanan V of Federal Bank says the firming up of the US dollar index owing to rise in crude prices and elevated US bond yields is exerting pressure on G7 currencies and the Indian rupee. He says yesterday the rupee closed at a record low of 83.21 while the Chinese yuan was trading around a 16-year low. He expects the rupee to trade in a range of 82.85 to 83.68 for the next few trading sessions.
Okay, on bonds, we have Lakshmanan weighing in saying rising crude prices and economic data is keeping U.S. treasuries at elevated levels. He expects the 10-year benchmark bond to trade between 7.1 to 7.25 in the next few trading sessions, with value buying expected at the higher end. All right, well, let's get in Rana Gupta, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management to join us. Rana, good to have you with us here. Thank you very much. You know, I was saying Teflon-coated markets here. That would be an apt description. You'd agree, Rana?
I don't know Teflon, but I think when you look at the markets, you look at the earnings, you look at the valuation, and you look at the liquidity flows. It has to be said that earnings, particularly the domestic ones, the valuation, and from a liquidity standpoint, the Indian equity markets, Nifty, as well as the broader markets, remain in a very solid footing, and that's why I think, to use your term, the Teflon coating, I think there are some negative noises coming from the global financial markets or in crude prices, but because of good earnings, valuations being more reasonable and good liquidity conditions, those are being not ignored at the moment.
In fact, there is so much action coming in from retail investors, right, Rana? I mean, Finance Minister Nirmala Sitharaman on Tuesday, when she addressed the media, she spoke about how the demat accounts have now hit 10 crores in India. And this is more than doubling in the last 4 years. Do you think that this equity cult, I mean, the strength that we're seeing from the domestic retail investors, something that can take India much higher from here? And in comparison to peers like China, do you think India can continue to outperform?
I think if you look at our take a structural view, I think we have been bullish on this domestic participation in Indian equities, starting from retail, HNI, and then promoters opening family offices. Whichever you look at it, I think the domestic flows to equity is something which we are very constructive about. And yes, this can be structural and take Indian markets a lot higher over a period of time. On your question about our performance vis-a-vis China, overall structurally, I think there is a case to believe that Indian economy markets will grow at a faster than China. So I think one can look at that Indian markets, not just China, but even emerging markets, Indian markets could be one of the better performing markets. Our sense is that, as you were highlighting even before the show, that consensus among FIs is that structurally underweight China and structurally overweight India, but tactically they're uncertain. This just tells you, in the way we look at it, this just tells you that people want to buy India, but they are not fully in yet. So from a FI perspective also, we think the liquidity flow over medium term should remain quite robust.
Hi, Rana. Good morning. I wanted to ask you about the Fed action. Overnight we had the labor cost as well that surprised on the upside. So data continues to remain strong. Do you think the Fed goes ahead and pushes through another rate hike? And I ask you this because I was looking at the Fed tool. It's suggesting that September we pause, but gradually at the start of this week for November, the odds were at 30%. That's moved to 45% that we get one more rate hike in November. Do you think so?
September was the best case. November, I think, as you're right, that November the odd for rate hike is beginning to rise. We will see how that pans out. But one thing we must emphasize, in fact, I highlighted this in last introduction as well. Let's go back to what you were discussing before the show, that China banning Apple phones, India banning import of laptop. All this, in the essence, are tariff and non-tariff barriers to encourage more domestic production. I think this fiscal and industrial policies that is happening over the globe, be it in US, be it in China, be it in India, is also a very important force. Yes, Fed policies and the interest rates are important, but I think we need to look at all these incentives given to manufacturing, which is bringing investment on the ground, which is creating jobs, and which is creating the economy overall resilient. In fact, this fiscal expansion is one of the reasons why US economy has remained resilient in spite of one of the fastest rate hikes that we have seen from the Fed. So I think this fiscal and industrial policy to encourage domestic production is something that has to be also given equal importance, if not more, as compared to the monetary policy that we always discuss.
All right, Rana, we leave it at that. Thanks a lot for joining in and appreciate your thoughts here on CNBC TV18. That's the word coming in from Manulife Investment Management. They speak about how India has a long growth path from here on and, is one of the best performing markets and continues to be in the months to come. Let's slip into a quick break with the Nifty at a 1-month high, higher for the 5th straight session. Is there more to go? We'll find out on the other side of the break. Our list of top 10 stocks also lined up from our research team. Stay tuned. Welcome back to Bazaar Morning Call. Well, this morning we have plenty of stocks to look at, so let's begin very quickly. The first one on our list is Ashok Leyland, and there's a theme actually here. It's the electric vehicle mobility theme. Yesterday, Ashok Leyland had a press conference where they spoke about Switch Mobility, which is their EV arm. They unveiled an all-new electric LCV series with a 120-kilometer range and connectivity. They plan to sell 3,000 electric LCVs in the first year itself. They're very bullish on that, and they've invested 100 crores towards the development of this entire range, this LCV range. Now, Switch Mobility, as we know, is the electric vehicle arm of the Hinduja Group, and it's been doing very well. If you map the last 1 year, it's captured 20% of the electric vehicle bus market already, compared to just 5% in the preceding year. So it's grown substantially over the last 1 year. And Switch Mobility is now the third largest electric bus manufacturer in India. In FY23 alone, they sold about 400 e-buses against just 40 units in the previous year. So you can see the kind of growth for the business. And right now, they have an order of 1,500 e-buses. That includes a recent tender for the supply of 950 e-buses. The company, yesterday, actually, Dheeraj Hinduja at the press conference said that Ashok Leyland wants to be in the top 10 of global CV majors, including in the electric vehicle space. So this is, a big theme. And there's lots actually happening in the EV space. We spoke about it yesterday, where, Hero is increasing their stake in Ather, where Varroc is increasing its stake in a renewable energy company as well. So I'm going with green here.
And I believe for this particular, offering from Ashok Leyland, a couple of sales notes are indicating a lot of logistic companies, Amazon, etc. It's e-commerce companies have already loaded up in terms of the order bookings as well. But that's about Ashok Leyland. Let's hop across to Yash. He's joining in to tell us about the August insurance business updates that have come in. Hi, Yash. Good morning.
Good morning, Nigel. So, of course, this is with respect to the general insurance industry. The number for the industry has been weak in the month of August. In fact, to the point of that we've seen contraction in the premium in terms of low single-digit number. As far as the listed companies is concerned, the bright spot here is ICICI Lombard. The premium for the company in the month of August has grown by 16%. So far in FY24, the premium has seen a growth of about 19%. There's a marginal 0.5% growth in market share for the company as well. New India Assurance, very weak numbers, I would say. August premium just growing by about 3%. So far in FY24, the premium growth stands at about 8%. There's a market share loss as compared to ICICI Lombard on the gaining side of about 0.5%. Finally, Star Health Insurance, the numbers have been coming in line with the industry. So growing at 19% in the month of August, growing at 19% so far in the year FY24 as well, and a 30 basis points increase as far as market share is concerned.
Okay, all right. Thanks a lot for that, Yash. Well, let's hop across to Vivek. He's joining to tell us about some more stocks in the news, and maybe during the course of the day, Vivek breaks some more news as well for us. Vivek, but for the time being, tell us about the stocks that you're tracking.
Well, good morning. Quite a lot of news flow regarding and surrounding the power sector. The government has been proactive in ensuring that, there is enough supply being met in terms of the rising demand. So first on our list are two power stocks, both Torrent Power as well as NTPC. Newspaper reports indicate that the power minister has gone ahead and floated a tender to facilitate procurement of close to 4 gigawatt or 4,000 megawatt of gas-based electricity. Now, this is in line with the government circular that came out on September 5th, where the government is actually going ahead and taking significant action plans to ensure supply of electricity from all possible sources. Now, along with that, the government has appointed an arm of NTPC, which is NTPC Vidyut Vyapar Nigam Limited, to facilitate the purchase. Now, why is both NTPC as well as Torrent Power in focus? NTPC will actually be standing as a standby in order to go ahead and ensure that there is significant gas availability, and Torrent Power does have some untied capacity as far as DGen plant is concerned. So on the back of that, both of these stocks will remain in focus. The other stock on our radar is Mazagon Dock. The company has gone ahead and signed a master ship repair agreement with US government. The agreement at this point of time is non-financial in nature. However, the company says that this particular agreement is expected to open up voyage repairs of US Navy ships. And lastly, Sterlite Green, STL, is on the radar. The company has partnered with True Vista to create fiber connectivity for South Carolina. This is for enhancement of the rural connectivity infrastructure.
All right. Thanks a lot, Vivek, for that. Well, let's go across to Surbhi now. She's tracking some more stocks that are in the news. Surbhi, what are you looking at?
So the first one on my radar is Landmark Cars. The company signs a letter of intent with M&M for opening a dealership in West Bengal. Now the dealership will engage in sales and after-sales services for a range of M&M vehicles. Next is Kirloskar Ferris. They've started the commercial operations of their mini blast furnace in Karnataka. They have replaced the top equipment which will increase the operational efficiency. The cost of this upgradation was 50 crores. And lastly, TV18 will also be on my radar. Viacom 18 has got the rights for the ISL, which is Indian Super League, for the next 2 seasons. The first match will start on September 21st. Remember, Viacom 18 had also the media rights for 2022 FIFA World Cup. So all of that is working in favor of TV18 as well.
All right, thanks a lot for that. Well, here's a quick recap of our top stocks with positive news flow. There's Ashok Leyland, ICICI Lombard, Star Health Insurance, Torrent Power, NTPC, Mazgaon Dock, Sterlite Tech, Landmark Cars and Kirloskar Ferris, while the only stock with negative news flow on our radar is New India Assurance. But bond markets and bank Nifty investors have their eyes fixed on the RBI today, as the central banks had promised to review on the September 8th its decision to impose the ICRR, or the incremental CRR of 10% on deposits garnered by banks between May 19th and July 28th. Now, removing of the incremental CRR will be a big relief, as it is a cost to banks. But will the RBI remove the ICRR? Lata is here with a quick CNBC-TV18 poll. Lata, over to you.
Well, the RBI decision can go any which way, and so the only way to answer that was a poll that we did yesterday, and that indicated that half the market, 50% of the people we polled, are expecting the incremental CRR to continue at, instead of 10%, at probably 5% or thereabouts. About 20% are expecting it to be fully removed and replaced with other instruments, and about 30% are expecting it to be retained as is. Now, just to explain this 10% CRR, what it means is that Reserve Bank worried inflation is high and the 2,000 rupee notes were bringing in liquidity. And therefore, from May 19th, when the 2,000 rupee notes came in, up to July 28, when the bulk came in, that whatever deposits people gathered, they have to keep 10% of that as idle. Deposits are raised at 5-6%, but they have to be kept idle. They can't be lent. So it's obviously negative for banks. Now, what we notice is the promise also came that on September 8th, they will review it. September 8th or before actually was the promise. And hence a lot of expectation today that whether it would be cancelled altogether. Now, today, yesterday, we don't have today's liquidity position. Yesterday, the liquidity position was a good 80,000 crores of surplus liquidity. So there are arguments that it should continue and inflation continues to remain high. But there are others who believe that on September 15th, the advance taxes will push the liquidity into a deficit because money is taken away from banks and kept with the government. That could be a good deficit of, about 2 lakh crore. And therefore, remove it now and, manage with steps like VRRR, variable rate reverse repo, which allows the RBI to pull out liquidity, and variable rate repo, which allows them to give liquidity to the market. Now, actually, I'm not even prepared to read everything I've written because I have one eye only on the website. It could come morning is what we are told, which means it can come before 9, it can come at 10, it can come at 11, it can come at after market hours also. But there is definitely a decision that's expected. Just a point, yesterday 2 things happened which is giving us the view that the ICRR will be taken off. One of is that the Reserve Bank announced a variable rate reverse repo of 50,000 crore. Now, if they are doing that, then don't they want the ICRR? There are others who say that in the past they have done 1 lakh crore. They've done only 50,000 crores. So are they retaining the ICRR? And then there was also a very big rupee intervention. The rupee didn't depreciate as much as other currencies in spite of the dollar going over 105. It did depreciate, but not as much. And therefore, the expectation is that the Reserve Bank sold dollars. And when you sell dollars, you're pulling back rupees because banks pay for it in rupees. Therefore, RBI has other tools to remove liquidity. The market is all over the place. Let's hope the decision comes before a bond market starts, before, actually stock market starts, because it's a very big positive for HDFC Bank. Could explain why the stock rose over the last 2 days.
Oh, absolutely. There was big performance there from stocks like HDFC Bank. Thanks a lot, Lata, for that. So the RBI will be reviewing the incremental CRR rate. Let's see how that plays out. But let's also get a quick handle on what's happening in the world of commodities. Brent continues to remain below $90 a barrel. Manisha Gupta joins in for a roundup of all the action there. Manisha, hi, good morning.
Thank you for that, Sonia. Well, even with that bit of a profit taking, the crude oil prices are headed for a second weekly gain. The latest support comes in from the fact that the U.S. crude inventories have declined much higher at 6.3 million barrels in the previous week itself. Markets in any ways are looking at tightness with the output cuts from Saudi Arabia and Russia. And then the China crude imports for the month of August gained up by 30% on a month-on-month basis. So we are looking at some pockets of strength continuing in case of the crude oil prices. And a sudden big profit taking or a very sharp decline in prices is not on cards yet. The markets also will watch out for the U.S. Fed official speeches that are in the evening today. And ahead of that, we have seen the dollar index also consolidate. That seems to be supporting the metal prices in return. So whether it's copper, zinc, steel, iron ore, we have seen prices headed for a weekly gain for many of these metals as well.
All right. Thanks a lot for that, Manisha. For the time being, though, we'll slip into a short break. On the other side, Gurmeet Chadda of Complete Circle is waiting for us with some fundamental stock analysis. Later on, we'll connect with Mr. Umesh Chaudhary of Titagarh Wagons to talk about the recent order win from the Ahmedabad Metro Rail Phase 2 project. Stay tuned. Welcome back. You're tuned into Bazaar Morning Call. You're on CNBC-TV18. Well, as promised, let's discuss a few stocks. And Vivek joins us to tell us about L&T and what brokerages are making on it post that big order win from the Middle East. Vivek?
Well, absolutely. Like we highlighted yesterday, L&T has likely bagged, two very large order wins from Saudi Aramco. And today, a whole host of brokerages have written on L&T. What Morgan Stanley has to say is that the company has likely bagged close to $3.9 billion worth of orders from Saudi Aramco. This particular order will account for 13% of the company's annual guidance and 17% of the core order inflows. Now, what is it that is making MS quite positive as far as L&T is concerned? They're saying Saudi Aramco this year has guided for a capex of close to $45 to $55 billion in CY23 versus just around $37.5 billion in CY2022. And Saudi Arabia is going through an unprecedented transformation, and they believe L&T is best placed to gain from this particular capex spend. CLSA too, what they've done is they've retained the buy stance, they've raised the target price, they've raised the EPC multiple that they have on L&T to 25 times versus 24 times earlier, and have hiked the SOTP target price. What they're saying is that the biggest opportunity for L&T in rest of FY24 is Middle East hydrocarbon, given the fact that the management has already alluded to the fact that Q3 and Q4 in India and domestic ordering could be slightly slow, given that it's a pre-election year. What they're saying is that L&T is long-standing in the MENA region, and its strong competency is one of the few preferred contractors of Aramco. And lastly, when we're coming to Citi, what Citi says is that they've also gone ahead and increased the target multiple on the projects and manufacturing business to 30 times from 28 times earlier. What they're saying is that although the order has not yet been officially announced by L&T, in Q1, L&T had increased its FY24 estimated prospects, given the fact that they were seeing increased hydrocarbon tendering as well as ordering activity.
Okay, thanks a lot for that. Well, let's do one thing. Let's get Gurmeet Chadda on board, Managing Partner and CIO at Complete Circle Consultants. He's going to, give us his view on a whole host of stocks. Gurmeet, always great speaking to you. Thanks for being with us on the channel. On L&T itself, right? I mean, the story has played out beautifully this year. But what next? Do you see more upsides? There are huge orders coming in the export market as well. Your thoughts?
Well, I think some re-rating could continue because the street probably feared that due to elections there could be slowdown. And I think that's not happening. Some offset, as Vivek pointed out, is happening through hydrocarbon space. In fact, even last quarter, they had a 30% growth there, which is their energy portfolio. The infrastructure still continues to do well, despite street expecting that there will be slowdown. So that grew more than 50%, and even IT services doing, the IT vertical doing well. Also, they've guided that for 9 months they will do almost, more than 1 lakh crore, which is heartening in terms of, and the net working capital to revenue it has been around 17%. They continue to guide towards it. So my sense is that if you believe that India is in an investment cycle, which I think it is, I think it should continue to be steady. Also, one important, we attended a conference and they pointed out that a third of the order book is now private sector. Now, which to me is also very positive for the broader economy as such. It used to be 22%, in the recent interaction with routers, they've said that. And a lot of sectors they highlighted are at 80-85% capacities, which is cement, metals, construction equipment, etc. So overall, if L&T doing well also augurs well for the broader economy as such.
Gurmeet, hi, morning. Not just India in investment cycle, even Saudi Arabia seems to be an investment cycle. That's the new order. But it's incredible. L&T opened flat yesterday, right? I mean, flat after that order. And then it crept up all the way 120 rupees or so. So, not everything gaps up. Some of these are slow and steady and gives you the opportunity to get in. You just got to be watchful. So that's where we are. Just a quick word, Gurmeet, on the shipbuilders, which seem to be not sailing but flying. Cochin Shipyard was up 20%, Mazgaon, Garden Reach. They take a 2-week break and then rally for another 2 weeks, 2-week break, then rally. But it's been a relentless march upwards. Your thoughts?
Little cautious, Prashant. It's run up quite sharply, the entire space, and some of the probably news in the price. And I think at some point of time we have to realize that the only going up on order book is very different. I think the order books also take time to execute. Some of them have very long gestation periods. One of them, which Mazgaon got yesterday, was a ship repair one. So we have to also see the mix of it, right? In terms of how much would be recurring, how much is one time, what are the different timelines of getting executed. So I think a lot of that news is in the price in a lot of space. There could be some more. Bull market can make things look irrational. We've seen that some of it in some micro caps as well. But this is one pocket I am a little cautious. I think the run-ups, defense, these order book related spaces, the frenzy is too much. Just reminds me of a bit of specialty chemicals post-COVID.
Hi, Gurmeet. Good morning. I wanted to ask you about the metal space. China seems to be unlocking and trying to pump up the economy. If that's the case, then metals does well. How are you all playing it?
So, Nigel, we got lucky with Mukand. There was a change of ownership there and almost like a special situation. The stock was available at 6-7 times. There was sizable debt reduction. Bajaj Group now owns 74%, led by Neeraj Bajaj and family. They hired good people. They got a very good senior resources from Jindal, and it's a good turnaround happening in the company within the change. Other than that, we have to be more tactical. I believe we are in the investment cycle and we are in a commodity super cycle, if I call it. And it's just that you have to pay the right valuation. Some these stocks run up too quickly and then correct too quickly. It's always a high beta sector. So we are invested in Mukand, and we have some interest in Tata Steel as in valuations become more reasonable, and also Hindalco. But it's not part of the core portfolio. It's largely tactical, and you make some money and you take them chips off the table.
Okay. The other space that has done really well and is picking up pace is this entire EV space, right? I mean, we were just talking about how there's so much happening in this vertical, whether it's Ashok Leyland launching a new range of EVs, Hero investing in Ather, Varroc investing in a renewable energy JV. From this entire ecosystem, where is there still price appreciation, you think?
No, I think I continue to like both Tamo and M&M, especially, so I just saw the Nexa launch yesterday. I mean, I'm very impressed with what they're doing on the EV front. Clear lead there. Overall order book, if you see for JLR is pretty good. The right mix of Defender, Range Rover Sports, which gives some comfort on margin, and not really seen free cash flows on Tata Motors for a long while. Reported almost 13% EBITDA margin, 3,000 crore plus PAT. Sizable debt reduction, balance sheet improvement. And I think all three cylinders, which is commercial vehicles, JLR and PVs, I think they're doing well. So I continue to like that, and I'm very impressed with the lineup they have in terms of Tata Harrier EV and some of the other models. I think it could be a big moment if they get some of the execution right over the next few years. But obviously the stock has also run up. We continue to like M&M, still trades at 16 times. There was a bit of a blip because of the RBL investment, but I think with the second half, even the tractor sales picking up as we head into state elections, I think that part should meaningfully contribute. Other than they're getting back to 20% market share in SUVs, and we are now trying to see the entire value chain in terms of where do we fit in. We are looking at some very small companies, also researching more on them. In fact, I've started liking Ashok Leyland as well. I think especially the higher tonnage vehicle sales are picking up. And the LCV front also, they seem to be doing pretty okay. So that's something, if you're a believer in investment cycle and, it's the way, guidance is coming from L&T, I think that should also probably do well.
Okay, all right. Gurmeet, request you to stay with us to give us your opinion on shipbuilders. The other couple of themes that have done well are defense as well as railways. And we've got a management with us, Titagarh Rail. Well, they bagged an order worth around 350 crore rupees from Ahmedabad Metro Rail Phase 2 project. To discuss the order book, the trends for this year as well, Mr. Umesh Chaudhary, the Vice Chairman and MD at Titagarh Rail, joins us on the show. Hi, Mr. Chaudhary. Good morning. Thanks so much for joining in. Well, congrats on this order win, this Ahmedabad project. Give us a couple of details. Is there a possibility that there could be a upscale of in this order from around 350 crores? And also for this quarter, what has been the total order inflow?
Sure. Good morning. Thank you for having me with you. So yeah, this is a contract that we got from Gujarat Metro. So as you know, that we got a contract from Surat Metro a couple of weeks, 3-4 weeks ago. And this is very similar to the Surat Metro. So you can consider it as an extension of the Surat Metro contract. Of course, these contracts do come with an option clause for additional quantities, but that's something which is too premature for us to speak about. We do not know how things will span out on the option quantity. What is important is we have to execute both these contracts, the Surat and the Ahmedabad Metro, which are very prestigious contracts.
Okay.
And what is the order inflow for the quarter? If you could give us a number. And for the year, what kind of order inflow are you expecting?
So as far as the order inflow is concerned, we do declare the order inflow or the order book on a quarter-to-quarter basis. So what we declared in June is what I can speak about apart from the announcements that we have made. So after June, I think these two are the major contracts that we have got. We generally do not announce the private sector wagon contracts, and we keep on getting them sporadically on a regular basis. But we kind of bulk them in during our quarterly earnings announcement, and we say that. So as far as the current quarter till now is concerned, two metro projects that we've got, and they are very significant because these are the first metro projects that we have got after the Pune directly. We did have the Bangalore metro in between, but that was via CRRC. So after Pune execution or successful execution of Pune, we are doing CRRC Bangalore metro, and these are the two direct metro contracts that company has received after the first one.
Mr. Chaudhary, I think there's some audio issue. We can't hear you very well. So what we're going to try and do is just sort of, repatch that audio. So request you to stay on. We'll take a quick commercial break. We also want more details from Mr. Chaudhary on the Vande Bharat orders, the fresh orders that have come through and what the order book is. So we'll come back in a bit.
How's the audio now? Is it better? Is it any better? Hello. Yeah, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Is this better? One, 2, 3, 4, 5. Is that okay?
Okay, welcome back. We were having that chat with Titagarh, but we'll get to that in a bit. In the meantime, we also have a market to trade, and the GIFT Nifty indicates a largely flattish start. Anuj is here with us to talk more about that. Anuj, the interesting bit is that despite everything thrown at the market, this is a buy on dips market. It's held up. Do you think that could be the course of the next few days as well?
Morning, Sonia. Till the time the market decides otherwise, right? Like we've been discussing, it's clearly looking like an uptrending market. Of course, today the big cue is what happens from RBI on that decision on that incremental CRR. I think that's something that the market's been trying to price in. Over the last couple of days, the market has been sensing a positive decision. I mean, given how HDFC Bank has moved over the last 2 days, and given that HDFC Bank is most sensitive to that CRR, it's led the rally over the last 2 days and has closed at the highest point of the day for last 2 days. Now, the Bank Nifty is about 1,500 points away from all-time high, and if this decision is positive, who knows? Maybe we get there. The Nifty, of course, as I've been saying, is set to hit new all-time highs, maybe even on course to go towards 20,000, 20,500 this series itself. And you know what the Nifty has done over the last 5 days? It was a 29 days time and price correction that we had from the high of 19,991. It's taken 5 days for Nifty to reclaim 21 days of losses out of those 29 days. 8 days are left. If you extrapolate, you should not bet too much in the market though. But if you extrapolate, that means another 2 or 3 days before the market hits new high. And if you're lucky. Of course, a lot would depend on the bank Nifty, where it's dependent on the RBI decision. But it's trading above all moving averages and has defended 44,200, which was the last breakout zone. Despite the recent underperformance, that zone was defended, which is positive. Let's see. But you know what? The mid caps have had a big run. And my sense is now large caps are beginning to catch up. And that trade could play out over the next 7 or 10 days or so.
All right. Thanks a lot, Anuj, for that. Large caps are catching up. In fact, we saw that yesterday as well, right? Not just L&T, which has been a big participant, but names like HDFC Bank, ICICI Bank coming back in a big way. We will continue our conversation with Umesh Chaudhary, Vice Chairman and Managing Director at Titagarh Rail Systems. He's back with us. Umesh, if my voice is reaching you now, thank you for the patience and sticking by. You know, you were telling us about the order wins. I wanted to ask you what the incremental orders are so far with the Vande Bharat orders. How has it progressed so far? What's the quantum looking like? And what is the order visibility? How will that flow through in your revenues?
Yeah, your voice is absolutely clear, Sonia. So, as far as, I was just mentioning to you about the significance of Ahmedabad and Surat, and probably because the audio was unclear, I'll repeat myself, that why it is more significant is because this is the first metro contract that we've directly got after our first successful execution of Pune Metro. We got Bangalore via CRRC, but Ahmedabad and Surat are the first direct metro contracts that our company has won. So it's very significant. Coming back to your question on Vande Bharat, we got the contract for 80 trains, which is 1,280 coaches in consortium with BHEL. The work is progressing pretty well. The target is to get the first train out before schedule, a few weeks before schedule, which is June 2025. And thereafter, in 4 years, the contract would get 4.5 years, it will get completely executed with a 35-year maintenance thereafter. So, in terms of additional Vande Bharat opportunities, there are a number of announcements. There is the Vande Metro, which will be eventually, hopefully, replacing the Mumbai local trains with more comfortable and safer trains. There are additional Vande Bharat. So, all of that will come in. But I think right now, we are focusing on the first contract, which we already have. It's the bird in the hand, which is under execution and very well within execution.
Got it. So what does this mean for, all of these orders put together? What does it mean in terms of a quarterly revenue run rate? I think the last time we spoke with you, you said that 900 crores is the quarterly revenue run rate that you're hoping to sustain. Can you build on to that through the course of FY24?
So FY24 is going to be the revenue primarily from the freight rolling stock. We operate in two segments, the freight and the passenger rail system business. And if you see our last quarter is also about 950 crores quarterly revenue, out of which 80-85% is out of the freight rail systems. And that would continue to grow because we are now operating at 600 to 700 wagon per month capacity. By the end of the year, we are targeting to get to 1,000 wagon capacity. So on that side, it should continue to grow to some extent. But the real the game changer would be when the passenger rail systems start contributing full throttle, which will be later than 2024. So we will start with the execution of Vande Bharat in 25-26. And that is going to be the real transformation for the passenger rail system business, wherein on one side, the freight rail system continues to contribute and the passenger rail system will start catching up. Very similar to what you were just mentioning about mid-cap and large-cap catching up with the mid-caps now.
Umesh, hi, good morning. So a lot of the focus is on order books and, how order books are doing very well. Lesser talked about is execution. And to that end, two comments recently. One is from the L&T CEO. It was an interview to a colleague of ours. He said that there is a extensive shortage of skilled labor. Right? That's one. And he put out a very large number. He said we need, I think, some 30,000 immediately, skilled workers immediately, and there is a shortage. We recently spoke to, a 25-year veteran at BHEL, who's now heading another organization, who said that, in a company like BHEL, the big problem which will arise is, again, skilled workers, because there has been a paucity of orders there on the power side for 10 years, so they've lost talent. In your business, is that a challenge at all, or it's all kosher? And how will that, if there is a challenge, impact execution? Will we have to account for longer timelines? Go on.
So, skilled manpower is always a challenge, and I think it's a happy problem to have in a country like India, where we need more employment. But L&T business and our business is quite different. L&T, I have not really heard the interview or read about it, but probably speaking about the EPC contracts, because that's the one that they are 30,000 people can only be required for that. As far as our business is concerned, we are continuously doing our own upskilling. We have our own ITI, which we have adopted. We skill people there. We are recruiting a lot of young talents that we are training. So, yes, it is a challenge, but is it a kind of a showstopper? No, absolutely not.
Chaudhary, final question before I let you go. The wagons that are manufactured for the government, there is data that's come out, and it appears that in July there was a sharp drop. Why is that? Tell us, how is execution progressing? Because June was very good, July saw a sharp drop, and for August I'm still waiting for that number. So tell us, what is the monthly run rate?
Are we talking about the freight loading or the wagon supplies?
The wagons. And I think it was around 450 in June, and I think that fell down a little bit. So if you could clarify on that front, how many...
Yeah, so the wagon which we supply to a mixture of private sector and the railway. So probably you're talking about the wagons that were inducted by the railway alone. But on an average, on a basis, we are maintaining a run rate of between 600 to 700. So let's say 650, around 650, give or take. And, that we are looking at building up from the month of October and then gradually ramping it up to 1,000 by the end of this financial year.
Okay. All right. We leave it at that, Mr. Chaudhary. Thanks a lot for joining us, and all the best with, your business and the wagon orders, especially the Vande Bharat orders. Of course, Ahmedabad and Surat as well. I think Gurmeet is still with us. Gurmeet, this stock has seen a 70% rally in the last 1 year. At this price of 800 rupees, is the risk reward still favorable for long-term investors?
Slightly on the higher side on valuation, but what is good is that the capex is doing well. So, for example, for wagons, they are talking of 12,000, going up from almost 8,000. Our coaches also from almost 250 to 800, considering the Vande Bharat, order book. And also, I think one JV they have on the forging wheels, where they have, I think it's with Ramakrishna Forgings. So that's so 3 verticals there. Obviously, the larger one being the top 2, both wagons as well as coaches, which we call rolling stocks. So it's a play on railway capex, and I think government has really upped the budget there. But would be happy probably buying it. The portfolio manager tells you that if you can get it maybe a little cheaper, it would be better.
Okay. All right. Absolutely. Why not, right? We'll take a quick commercial break here. We'll come back with the pre-open session, which is just 4 minutes away. We'll also have Amit Anwani of Prabhudas Lilladher to talk about L&T's big order win from Ramco. So that's coming up, and interesting conversation up ahead. Stay with us.
Thanks for staying with us on Bazaar Open Exchange. We are live from the CNBC-TV18 Motilal Oswal studio. We have Mitesh Thakkar and Kush Bora joining us now to tell us how to approach the markets today. Mitesh, let me start with you. It's been a decent showing so far, given all the negative cues. You think we can build on to these gains? Is 20,000 here before you know it? And what's the strategy for today?
Good morning, Sonia. See, I think yesterday, the more important event which happened technically was the fact that the bank started participating. Now, there is a news flow pending today, but looking at the short-term structure, unless until we see the bank Nifty get below 44,700, I think there's a good chance that we will head towards 45,050, even 45,320. So I think that should propel the Nifty also upside, also on the upside, which in itself is showing decent chart setup, which is positively biased. So I think overall, I'm looking at a test of 19,850 and then maybe 20,000 as the round number that still has some psychological importance. And on the bank Nifty around 45,050, maybe in good case, even 45,320, 350. So I think there is clearly, from a 1 2 day point of view, trading traction on the upside. Pending, barring this event, if it turns negative, then you'll have to reverse the view.
Okay, all right. Kush, good morning. How about you? What is the strategy that you're looking at? And do you see more, gains being built on to some of these spaces like mid-cap IT, for example? What are the stocks that you're looking at today?
Hi, Sonia. First of all, very good morning and thanks for having me on the show. Well, extremely encouraging to see the Nifty finally break out of that 19,550, 19,600 resistance zone. And the options data now is suggesting that, this could act as a support zone. So the next level, obviously, to watch for, on the Nifty, it is directly 20,000 for me. The overall setup is positive on the Nifty and the Bank Nifty. IT stocks have started performing. The big boys have started, clocking in orders. That is obviously auguring well for the mid-cap names as well, like Persistent, BSoft. So I'll have some of these on my radar. However, a small word of caution on the mid-cap front. The mid-cap index itself has gone into overstretched territories. Now we're seeing, some negative RSI divergences on, a lot of these stocks. So in the near term, there could be a dip, before these stocks move to higher levels. So I'll be a little selective, in my, mid-cap stock picks.
Okay, so take us through your picks. What do they look like?
Incidentally, they are from the mid-cap space. The first one is VIP. This stock's actually completed its round of profit booking and rebounded from its 200-day moving average yet again, like it's done a couple of times in the past. So VIP looks good. From here, one could take an entry for near-term targets for 750 and 780. 680 is where I would place my stop loss. SJVN. Very similar story here. However, the dip here has been shallow, bought into, and the stocks again rebounding. So for SJVN, my targets would be 68 and 72. The stop loss would be 60.
And Mitesh, what about you?
I also have all long calls today. DLF made a fresh swing breakout, so that's a buy with a stop at 520. Would look at a target of 550 here. A buy on Indraprastha Gas, and both IGL and MGL have done well. And IGL, I think, could possibly head towards levels of 490 to even 500. That's a buy with a stop at levels of 470. A buy on Nalco, which after a good rally has given a pullback in the last 3 days, come down to support levels, likely to bounce back from here. So buy Nalco with a stop at 98 for targets of 105. And ABFRL is a buy with a stop at 226 for targets of 242.
Mitesh, just a quick word on, the shipbuilders. And is there more momentum here? I think you own Mazagon in your portfolio. Correct me if I'm wrong. Mazagon, Garden Reach, Cochin. And then two other names, if you've not already discussed them, L&T and Coal India. Coal India was up 7%, is done 15% this week. Go on.
So, morning, Prashant. I do own Mazagon still, and I think it's making fresh high. They are very overbought now, so I'm scared to enter at these levels. But if somebody's holding them for Mazagon, I think at least there's some reference point. It had about a month of consolidation, and the breakout is around 1960, which happened yesterday. So 1945, 1950 becomes your stop loss on existing long positions. Cochin also, I think, not only met the target which I was looking at of around 1,000, 1,050, but exceeded them, and there's no signs of stopping. But again, extremely overbought tradings means very tricky to enter at these levels. But trail your positions with a stop below 1,000. It's still about 150 points lower. But then in blue sky territories, you can see stock even gain 20% before they start correcting from overbought, strong overbought level. So I think there is still more upside momentum left over here. Coal India is something which had a big breakout. Disclaimer, we had a trading position which we booked out yesterday. But I think the long-term charts are very, very positive over here. I would not be surprised to see a target of around 340, 350 on the extension basis. Again, a stock which is well into new highs. But again, it's exceeded its Bollinger Bands and it's again got into a very overbought position. So I'm waiting for some dip to re-enter. In that sense, I still have vested interest in that. I'll buy if I get an entry around 265, 262. And looking at a position target of 340, but in the short term, it could be 300. L&D is something, again, Prashant, it's met all the levels and continues to surprise. But had a fresh breakout yesterday about 27.50. So that becomes a trailing stop loss. Similar to all the other stocks which we have discussed right now. I think a fresh entry, I'm not very comfortable with the extreme overbought readings.
In the pre-open, Cochin is up another 10%, 13%. It'll settle down 2 minutes more and things will settle down. But just putting those stocks up on your screen, Cochin 20% yesterday, 11%, at least in the pre-open, on good volumes. And then look at, we put up Mazagon. That was also, I last looked at the pre-open, some 4%, 4.5% high after yesterday's rally. And maybe you can look at Garden Reach while we're at it. There is momentum spillover from yesterday. That's a positive start at least. With the market, the Nifty, which is indicating a 20, 30 odd point higher kind of a start. Mitesh, thanks very much. We'll come back to you for more in a bit. Sonia.
In fact, a lot of stocks in focus, right? Ashok Leyland in pre-opening is also up almost about 2% on the back of the new launches in the EV space. We were talking about Cochin Shipyard, Mazgaon Dock. IRB Infra is moving up with quite a bit of gusto as well. It's a good time to take a look at what's happening in the capital goods space because L&T is definitely in focus as the infra major has likely bagged an order worth nearly $3 billion from Saudi Aramco. It's not confirmed, but a whole host of brokerages are bullish on L&T as well. Discuss this and more. We're joined by Amit Anwani, the analyst at Prabhudas Lilladher. Amit, thanks a lot for joining in. The stock has already gained about 40% this year. Do you think that there is more upsides, both in terms of earnings potential? Would you raise your EPS estimates? And what are your thoughts on this impending order win from Aramco?
Right. So there have been a talk about almost $4 billion order win from Saudi Aramco in Middle East. And definitely we have not yet revised the EPS. We are waiting for the company to announce that. But having said that, if we recollect, during Q1, they significantly increased the order prospect for, from Middle East area from almost by 1 lakh crores, so to 3,47,000 crores. The full year, the remaining 9 months order prospect pipeline was roughly about 10 lakh crores versus, just 9.7 lakh crores for full year. So there was a significant revision in order prospect, and Kingdom of Saudi Arabia anyways have came up with their Vision 2030 document, and they are moving from oil-based to the renewable, a lot of capex to renewable energy and energy transition side. And just 7-8 months back also L&T got a mega order when in Neom City project from Saudi Arabia, which was again of the similar size, $2.7 billion. So definitely there are strong prospect in the hydrocarbon from international market for L&T. And with respect to earnings, I would see, the infra margins anyways faced heat because of the commodity inflation in the past. And now hydrocarbon slightly better margin business relative to infra. If the contribution keeps on increasing, I think it would definitely aid the margins in coming years as well. And with respect to the full year prospect also, with this all large mega complex order wins, definitely we built in about 12.5% growth for FY24, but I think it would comfortably surpass that with this large order wins.
I may just request you to hang on for a minute. We have some news coming in on RBI from RBI on Kotak Mahindra Bank. They've approved the appointment of Deepak Gupta as the interim MD and CEO for 2 months. So that's the news flash that's coming in. That's the news that's just come in. So keep an eye out on that stock. For starters, the stock is up close to around 0.5% odd. Well, Amit, thanks for your comments on on this order win. Do you expect though a bigger opportunity, say from the African countries as well? And given the kind of order inflows that we're expecting from the Middle East once it's announced officially, do you think you will raise the multiple that you're giving to L&T?
Yes. So in their annual report and previous commentaries, they have anyways definitely highlighted that they are also focusing on the African markets and Southeast Asian markets to get the EPC orders. And if you see the current order book of 4,12,000, which includes 1,10,000 international orders, within this 1,10,000, largely these are Middle East dominated. Almost 85% of the book is Middle East dominated. And with focus on more African countries like Algeria, they already won one mega order in the past. And there are expectations that there would be more orders from African countries and Southeast Asia as well. With respect to EPS revision, definitely with, considering that this is the election year and order intake would definitely be front-loaded in the first 9 months, and there could be some moderation in 4Q and Q1 next year. This, along with the international orders which they are bagging, definitely increases the revenue visibility very strongly, at least for next couple of years. And the re-rating can't be ruled out. Currently, we are giving roughly...
Amit, as of now, what kind of multiple are you giving it?
So standalone business, I'm giving about 22x FY25. And we did saw a lot of improvement in Hyderabad Metro, and we raised our target price last time to 29.55 and maintained the buy rating. So I think the strong move could continue in L&T, considering that they have been positively surprising on the momentum of order intakes, especially also in the international markets, which is somewhat also supporting the domestic order inflows.
Amit, hi, morning. The last time I think there was a boom for L&T from the Middle East was what, 2007, 2008? Or maybe before that, right? It used to be a pretty big growth driver. And then, of course, I think that was largely because of the global financial crisis, things there got into a bit of a murky situation. But across your coverage universe, Amit, not just L&T, what are your top picks for absolute returns from here?
Right. So we have been highlighting there's a lot more surge happening in the mid small cap companies, and we have been highlighting Carborundum, Universal in the industrial consumable space. Market in abrasive space, we are expecting 25% CAGR and at least 25% returns. We have a buy rating on the stock. And we did have been, obviously there is a strong rally which has already happened. Apar Industries, which is one of the leading conductor company, and have been a multi-bagger past 1 year. So I think these are our top picks in mid-small space. And in large caps, we are preferring the industrial automation companies and L&T. So ABB, Siemens, L&T, long-term positive. Obviously, the valuations are stretched at the moment, and some correction can't be ruled out. But I think this would be the pack to bet on for upcoming time. Yeah.
Okay, all right. Thanks a lot, Amit, for stopping by and giving us those details. Well, Apar Industries, what a big multi-bagger. It's been conductors, cables as well. And, they had spoken to us here on CNBC-TV18, and they were very, very positive in terms of the outlook. Well, it's 9:10, so let's get in Mitesh back with us. I think he's joining in to give us his 9:10 call. Mitesh, fill us in.
Well, I'll go with the buy on IGL for targets of 492 to about 495.
Okay, a buy on IGL. That comes in from Mitesh. Thanks a lot for that. Well, let's go across to Lata. She's back with us to tell us how the bond markets and Bank Nifty investors have their eyes fixed on the RBI today, as the central bank has promised to review on September 8th its decision to impose the ICRR, or the incremental CRR of 10% on deposits garnered by banks. Lata, over to you.
Well, one would have thought that something would have come from RBI already, but it hasn't. Well, the RBI is not bound to give us anything when we expect. It could come at 10, it could come at 11, it could come at after market hours, though our sources had told us that they would give their decision in the morning. But anyway, what is this decision we are talking about? The RBI imposed a 10% CRR on deposits garnered between May 19th and July 28th. Their argument being that this was excess money that came in because of the return of the 2,000 rupee notes. And RBI has always believed that excess liquidity in the banking system means easy lending and it increases inflation. And since inflation quite unexpectedly rose to 7.44%, this was an unexpected announcement that came that we want to drain out liquidity in an urgent basis. But they said they will review the decision on September 8th. September 8th, Friday, today, is a reporting Friday. So normally changes in CRR are made effective on a reporting Friday. So it was logical that they would review the decision today. The other reason why they would is September 15 is an important day for liquidity because advance taxes lead to a huge outflow of money. So liquidity changes automatically. It goes into very deep deficit. So the expectation was that, they may either remove or reduce the ICRR, but we have to wait and see. If they do, it's very good for banks. But over to you.
Okay, thanks a lot, Lata, for that. Well, let's head into the market opening now. The first tick on the index is in the green, up almost about 30-odd points. The sensex is up about 70-odd points as well. It's a decent start, actually. The mid-cap index is up about 150 points too. So not a bad opening at all for the market. The advanced decline ratio is at 1,800 stocks on the advancing side. If you look at the big movers this morning, L&T is up almost about 1.5% on the back of that order win, the impending order win, that is, so 1.2% higher. Tata Steel, NTPC, Bharti Airtel, Bajaj, Finserv are all up about 0.5 to 1%. The other stocks in the green are Maruti Suzuki, ONGC, Power Grid and Bajaj Finance, looking pretty good there, 0.5% higher. While on the downside, names like Hindalco, Axis Bank, Infosys, HDFC Bank and Britannia are leading from the front. That's on the downside. But the market is largely very quiet. The space to be in definitely once again is the mid-cap end of trade. Big double-digit moves in many names actually. Mazgaon Dock, of course, is the one that's leading from the front. And of course, Nigel will talk more about that. But in general, the space to be in is in the broader markets. The Nifty, by the way, at 19,750 is less than 2% away from that all-time high of almost 20,000. The mid-cap index once again is at a record high. So this is a good-looking screen, although it may not look like as much of a big move on the headline index. But slow and steady, the market is inching higher, and there's plenty of participation in the broader markets. The Nifty Realty Index is also picking up quite a bit, up almost 1%. So there is quite a bit of participation on that end as well.
Well, that's right. So, talk about Mazgaon Dock. Just take a look at Kochi Shipyard as well. There was a downgrade coming in from Kotak today. Downgrade to sell from buy, but that stock's not stopping. Kochi Shipyard is up close to around 7% as we speak. Transformers and rectifiers, a smaller stock, but volumes are very high. 8 lakh shares traded in the first minute itself. So keep an eye out on that one. It's up more than 10%. The other couple of notable movers are IRB Infra. This I'm talking about volume buzzers in the first couple of minutes itself. UCO Bank as well is higher in today's trading session. And RVNL as well continues to march along. On the downside, you have JNK Bank that's down 2%. MMTC, after rallying close to around 50% in this week, that one's pulled back close to around 2%, and volumes very, very high on that one. And smart meter maker GeneSpa has corrected from around 295, it corrected to around 265. For starters, that stock is up 2.5%, and the metal stocks continue to do well. PSU Metals in particular, Nalco and NMDC, both of them higher in trade. Prashant, what else?
You can only look at and marvel at what's happening with these shipbuilders, right? It's incredible what's going on. And you can marvel and maybe make jokes, Sonia, Nigel. I was thinking, what would you say for something like a Mazgaon Dock? I was thinking, the ship is sailed would work. And just nowhere near docking. The ship of dreams.
I think we'll have to think about that. I think you had come out with a good one for defense, right? Defense on the offense.
Where do you come up with all this? While you stay up at night, while you stay up at night tracking the US markets, is that the end?
I just thought of it right now. But it's just Vivek put out data, right? He basically looked at order booking for shipbuilders, and we put this out, I think, yesterday. It's not as if there's been some huge accretion in orders or anything. And of course, execution is something we need to wait and watch out for. Let's just have the stocks up. Mazgaon, Garden Reach, and Cochin Shipyard. So 6.5% on Mazgaon. There is, what else? Garden Reach, which is up about 3.5%. And there is Cochin Shipyard, which is up about 8% or so as well. So this is just a one-way kind of a move that we are seeing there. The Nifty will come up as well for a quick look. So we are doing fine, given, of course, the circumstances overnight. It's not as if it's mattered for the last 2 or 3 days, and it doesn't today as well. We're up about 37 points. That's about just 0.25% or so, 19,764. Sanjeev Prasad is our man of the moment. He's Managing Director and Co-Head at Kotak Institutional Equities. He's joining us now to take some questions. Sanjeev, good to have you with us here. Thank you very much. I think, you guys today brought down Cochin Shipyard and targets there a notch. Talk to us about what's happening here in this space, in the shipbuilder space, with some data and some numbers, and what one should do here if one doesn't already have exposure. Go on.
That's not the shipbuilder space. Anything to do with defense and the broader capital goods space has been on fire for the last 6 months now. Yes, there is a powerful investment theme which is building up, but now clearly the narrative is well ahead of the fundamentals. And some of the stock prices are very, very hard to now rationalize. We had a positive view on Cochin Shipyard, but the weight has gone up in the last 2 days. 20% up yesterday and another 7-8% up today. Clearly, how do you rationalize these things here? There is some expectation of second aircraft carrier order being given to Cochin Shipyard, but looks like the market has assumed not only will the second one be given, but a third and a fourth, and God knows, what else. So everything is getting discounted so early, without any signs of any orders being given or any execution risk being factored in. It's very hard to even try and rationalize these things anymore.
And that's why the that's why the jokes coming. Anyway, Sanjeev, is the broader market also giving you sort of is it generally very expensive on a variety of matrices, or you think not really? What's your sense? Because there is a fair bit of debate on that one. We actually had a couple of fund managers with us day before yesterday. We had Tahir Badshah and Pankaj Tibrewal, and Tahir was saying, well, he wouldn't focus on indices themselves, but the economic cycle. So that kind of justifies what's going on. And Pankaj was on the other side. Just curious to know where you stand on this one.
Well, it depends on which part of the market you're looking at, to be honest with you. So if you look at the large cap indices, let's say BSE 30 or Nifty 50, I think can still make some case over there. Valuations are high, but they're not, crazy. Look at Nifty 50 on a 1 year forward index, it's 1 year forward multiple, it's about 19.9, which is not too bad in historical context. Look at the 5-7 years, it's still not looking that crazy. Of course, some of the individual names are on the higher side, and there are risks to business models emerging, which should result in derating over a period of time. But it's not as if you're in a bubble zone or anything over here. But if you look at the mid cap and the small cap indices, particularly as you go down the quality curve, the less known mid caps and lower quality small caps, and that is where the real froth is, and that is where the excitement of the market is, I guess, at this point in time. You can see from the number of folios being opened in the mid cap and small cap funds, and see the money which is going into all the mid cap and small cap funds entirely. Look at the flow data for mutual funds in the last 4 months. Currently, somewhere about 250 billion rupees has been put into equity mutual funds. And all the money has gone into mid cap and small cap funds. In fact, more than that, there is actually a money coming out of the large cap and the flexi cap funds. So that is the mood of the market. Given the performance of mid cap and small caps, there is now more money chasing the stocks. And given the liquidity of the stocks is not that high, obviously, many intend to buy results and prices going up, and that results in more money coming and now becoming a crazy upcycle. Obviously, there is a big disconnect between fundamentals and valuations in many of these names. I don't know what will break the cycle, but clearly there is a lot of discomfort with respect to valuations of many of the mid cap and small caps. I think the large cap names are probably a lot more, I would say, at least somewhat sensibly valued, compared to the madness we are seeing in the mid cap and small cap names now.
Sure. By the way, the market is picking up pace. Just look at that, going like a rocket as we speak. I mean, the Nifty is now almost at 19,800. And big moves coming into individual names. It's not just the Masgao docs of the world that's, gaining all the limelight. Look at transformers and rectifiers, 15% higher on that stock now. So big mover in the mid-cap space. You have a lot of these names like NMDC, NTPC, GAIL, Petronet LNG that are all at fresh 52-week highs. So lots happening in the PSU arena as well. And then, names like DLF, Varroc Engineering, HCL Tech is at a fresh 52-week high. So that this market is sort of ablaze with a lot of ideas. Sanjeev, good morning and thanks for being with us. Where do you see the next pocket of growth come through? There's so much, right? As we were saying, anything and everything is rallying now. But where do your preferences lie?
From market perspective, you're saying?
Yes, from like sectoral angle.
Well, I hope you don't lose too much capital by the end of, let's say, a year or so, because clearly we are in crazy zone as far as many of the mid caps and small caps are concerned. So I would try and preserve my capital to the best extent I can by being in the large cap names if I have to be necessarily invested in the market. And within the large caps, the places where you can at least make some case for valuation being reasonable are really the banking and financial services names, including insurance. Some of the healthcare pharma names are still looking reasonably okay, I would say. And beyond that, pockets of consumption names are okay, at least for the time being. But honestly, that's about it. Anything to do with capital goods is looking extremely expensive, whether it's large cap or mid cap. Anything which is to do with, let's say, real estate has now gone to somewhat uncomfortable levels, I would say. Again, you're fairly positive on the housing cycle. You're clearly seeing a big housing cycle which has been in play in the last couple of years, and that should continue for the next several years. But the problem is in India, everything gets discounted so early, next 5 years, earnings get pulled up. So in that case, you could have a situation where, stock prices don't benefit for the next year or so. I don't see a big correction also. Looking at, the medium-term prospects of India seem to be very, very good. Given the status of other emerging markets, most emerging market investors would look at India more favorably even in the correction. So I don't see a big correction, at least in the large cap names. So that's my preferred segment for the time being.
Hi, Sanjeev. Good morning. You're clearly sounding a little bit more cautious then. And the last time we chatted, I quizzed you about what are you making of this promoter selling? You said, well, that's a hint, right? If promoters are selling. But it seems post, the last month and a half since the time we last spoke, promoters have sold even more. And all of that is getting lapped up. What's your comment on it? Are investors getting a good entry or are promoters taking money off the table at the right time?
Well, there are investors clearly who don't want to take the hint, If promoters are selling and they are the biggest insiders, they know what is the fair value of the companies better than any of us will ever know, right? So if the PE guys, the promoters themselves are selling, that gives you a fairly good hint as to what is going on with respect to valuation in the market.
I guess, the way forward is that there are a lot of these sectors which were laggards that are coming back after a long while, right? I mean, you were talking about capital goods, there's infrastructure, there is defense. Defense has not done anything for last 10 years, and now suddenly in the last 2 years, it's come back in a big way. Sugar is coming back as well. So if you are a bit cautious at these levels on the mid-cap space, where do you still see some valuation headroom? Both in mid-caps as well as in large caps? Do you still like IT and pharma? Because IT has come back as well.
Not really, Sonia. If you look at the bottom of valuations across the board, there isn't much value left in the market, barring, as I was saying earlier, the banking and financial services space, pockets of pharma, healthcare, and consumption. But that's about it. Either stocks are fairly valued, which is probably the case for the IT services companies, or they are expensively valued currently. And then you have many of the mid-cap and small-cap stocks, so we don't even get me started on those. There's no point in talking about things we really can't comprehend anymore. Like going to a movie, trying to understand the movie when it's a different language, compared to your natural language. Can't understand anything. So after some time, you just stop, applying your mind and start enjoying the movie. Whatever is going on, you enjoy the fun.
Across your coverage universe, Sanjeev, how many buys do you have now?
I will have to look at it, but 1 second, hold on if you want to.
I mean, just to get a broad sense, I mean, is it 25% of the names? Is it...
more buys than sells?
Hold on 1 minute. We have about 28% of our universe is still a buy.
Okay.
And about 58% is that. So we have about 45% of our universe as reduce or sell now, which is roughly half the coverage.
Okay. Just one more question on a specific space. This is the EMS space, Dixon and Amber and Keynes and Sirma, etc. Again, what's the call here? It's an opportunity, absolutely, no doubt about it. Electronics are the second biggest import for India, and we start to make a lot of it here. So the road is a long one. But the question is whether one can buy these now at where they're trading. Go on.
If you do a reverse valuation of these companies and the initial coverage on Dixon, yes, there is a long runway of growth, but if you just do a reverse valuation, the kind of numbers which have been thrown up in the outer years is like staggering. In case of Dixon, for example, the company should have, something like 50 to 70% market share in many of its current lines of businesses. That is obviously not going to happen, unless and until we are completely underestimating the growth. But we have been very generous in our growth assumptions. We are very generous in our profit assumptions. Even then, the market share being implied by the current stock price, 10, 20 years down the line is so high, it just doesn't make any sense, to be honest with you. But yeah, the next 3 years, 5 years growth will be fairly strong. So I guess that's what the market is focused on as of now. And forget 3 years, I guess the market is more focused on next 3 months for now.
Absolutely. Fair point, Sanjeev. Actually, we in a little bit from now, we have the management of Dixon joining us. if you're interested, you can listen in. But thank you so much for joining us and running us through your perspective. Always interesting to speak with you, Sanjeev. Well, RBI has approved a 2-month term for Deepak Gupta as the interim managing director and CEO of Kotak Mahindra Bank. My colleague Abhishek is joining in with the news and what could be the way to look at this one. Abhishek, morning.
Morning, Prashant. So as you mentioned, RBI has given 2 months time frame or 2 months period to Mr. Deepak Gupta to be the interim MD and CEO of Kotak Mahindra Bank. Now, Kotak Mahindra Bank had mentioned earlier that they have given the candidate's name for MD and CEO position of the bank to RBI in early September that they had mentioned to us. In the press release, they had also mentioned, earlier that they have made Mr. Deepak Gupta the interim MD and CEO of the bank till his retirement, that is 31st of December 2023. So this has been, cut short in terms of RBI giving the approval. In all likelihood, RBI may be close to finalizing or may have finalized the candidate for the post of MD and CEO of Kotak Mahindra Bank. Back to you.
Okay, thanks a lot for that. Very helpful there. But let's move on and talk about Dixon Technologies. It's definitely in focus. The stock has surged more than 75% in the last 6 months. Do note the government has received 32 applications for its IT hardware PLI scheme. And there are a lot of brokerage notes that have come out as well that are very, very optimistic on this entire space. In fact, in the last 6 months, the stock is up about 70-odd%. CLSA put out a note where they have an outperform rating with a target at 5,675. So despite the big up move, CLSA is very optimistic on this space. Saurabh Gupta, the Chief Financial Officer at Dixon Technologies, joins us now to talk about that. Saurabh, thanks a lot for joining in. I want to start by asking you about the EMS industry on the whole, because CLSA put out a note where they said that they expect this industry to deliver a 22% revenue compounded growth over the next decade. Are you as optimistic as them? Do you think that this could be the growth run rate? And also, you were a successful applicant in this PLI scheme. So what is the kind of incremental capex and revenues that you're looking at?
Yeah, good morning, Sonia. Yeah, so we are also of the same conviction, Sonia, that it's a large opportunity that we are sitting on. And that's the reason we are putting up more investments, expanding our capacities. If you see the CLSA report, clearly they pointed out that India's share in global electronic space is just 2%. And by 2030, it should be higher single digits. And we're talking about a 20% market share by FY40, financial year 40. So clearly, if you look at today, China is the leader there with a 45% share. But now all those things which happened in China, I think so because of the strong policy framework in India, because of the low labor costs, because of abundance of talent pool in India, and clearly the global geopolitical tension, the supply chains are shifting, and we are sitting on a large opportunity. So we have the same conviction that is being reflected in the CLSA report.
Got it. Also on the PLI scheme, you've been a successful applicant. I just want to understand what is the kind of capex that you're putting on board for this? What is the kind of revenue potential? And you spoke about how, in general, India has just 2% of the electronic market, globally. As this pie grows, how much of a beneficiary could you be? So both on the capex and the revenue opportunity?
Yeah, so coming specifically to this IT application, where the government has received 32 applications, and of course we have applied in the larger category. So we have committed a capex of 250 odd crores, that is in the hybrid category for domestic companies. We have committed a revenues of 48,000 odd crores under the application over a period of 6 years, starting next financial year. We have committed to the local value addition, the deepening of manufacturing as the PLI has been structured. So we think that there will be a large opportunity for localizing a lot of components in this category. So clearly after mobiles, I think so, where we have acquired some large customers lately, I think so IT hardware will be a next trigger for our growth going forward.
All right. Hi, Saurav. Good morning. Well, you have partnered with Acer. Do you still have any order book with them? And also, do you see other clients coming on board soon?
Yeah, so Nigel, Acer definitely has been, we have been working with Acer for the last 18 months. And clearly the order book with Acer will increase now significantly because of this IT hardware PLI and also government putting restriction on the import of laptops and tablets. And secondly, we are in the final stages of closing our partnership with a very large account, which has a very large market share both globally and in India, and we'll be announcing that very shortly. And that's the reason we have a very strong conviction in the revenues that we have applied in the application.
How fast and which is this global client you're looking at? And how soon can we hear about it?
It will be very soon, Nigel. I think so. In the next 1 month or so, you'll have the name on it.
Saurabh, hi, good morning. This is for laptops.
This is for laptops and tablets, yeah.
Laptops and tablets. Okay, so could be Dell, could be HP. One of the two. You can give us that much.
I'm not giving the name right now, but clearly we'll have the name in the next 1 month. Yeah.
Is Prashant getting it, in the vicinity?
So clearly, I'm the top 3 brands globally. So yeah, but you can ask those.
Top 3. Which one are we missing? Dell, HP, which is the third one?
Saurabh will help us.
But what about an order from Jio Bharat? You secured that order, I think. What is the progress on that? What's the quantum of the order? And will it only be on the phones?
Yeah, so the Jio Bharat phone has met with an initial success, I think so. They have come out with an attractive pricing. So clearly, there's a big 2G market that they are ready to grab. And we have got an order book of almost 2 crore mobile phones from them, I think so, which should get executed by March, April next calendar year. And then depending on the further success, we can get repeat orders. But clearly, initial success has been very good.
So 2 crore phones would be how much? What would the quantum be? Is it, are we looking at about 1,500 crores?
Around 1,800 odd crores. Yeah, around 1,600 to 1,800.
Okay, 1,600 to 1,800 odd crores. Executable by when, you said?
By March, April next financial year. So starting now till March, April next calendar year.
And would this be also, I mean, apart from the 1,600, 1,800 crores, would you also be looking to get orders on the laptops, the Jio laptops?
So it's very preliminary right now, but we haven't had any kind of discussion so far. But yeah, hopefully we have a strong relationship with Jio on the mobile side. So hopefully we will work on that side.
Okay, all right. Saurabh, on the mobile segment itself, that's going to be the big growth driver, right, from here on. You were supposed to see traction start from, say, September for ITEL smartphones at approximately, I think, 1 million per month. And also Xiaomi, that was expected from October, another million or so. What's the progress over here? And is this going according to plan? Give us on a monthly basis, what could that number be for both these two large companies?
Yeah, so Nigel, clearly mobile is the largest trigger for our growth. So not only our order book with existing customers like Motorola, as well as Nokia is increasing. So Nokia and Motorola will have an increasing share of export markets. Xiaomi, as you mentioned, I think so will start executing from October. And clearly, over a period of time, it can become a large opportunity for us because they're clearly a 20% market share Indian market. Again, with ITEL, we've got order book both on the feature phones and smartphone side, and then the Jio Bharat phone. So clearly, mobile will be a very large opportunity. I don't want to pinpoint a number, but it will be a very large number this year and definitely an even larger number next year.
Saurabh, is there no way to break into the Apple supply chain at all? I mean, the one way we had that here in India was the Wistron plant, which Tatas are taking over. But I mean, for you, is there any way to get into that?
Yeah, so Apple is definitely deeply committed to India. They have said that by 2026, they want to source 20% of their global requirements from India. And because of the geopolitical tension and recently the ban by China in the government for Apple phones, so clearly that is a positive for India. My sense is Apple has continuously diversified its vendors, starting with Foxconn, Pegatron, Wistron, then Luxshare, India, now Tata. So clearly, we will definitely work towards getting Apple also on board. But yeah, as of now, there's nothing in the pipeline.
Because typically, the 40, 45 odd suppliers that Apple has in China, when Apple moves, they try and kind of create that ecosystem with the same companies. But is that could that change? I mean, is there what could be the way in? Is it could we expect something? Are you working on it?
So what I can clearly say, what you mentioned right now, clearly they want to shift 13, 14 suppliers, which they have given the list to the government as well, where they will encourage those component suppliers to come into India. My sense is for us also, Dixon, the way for growth for us is a lot of partnerships and JVs in component ecosystem. So we will definitely work towards it if Apple gives us a chance. But definitely, as of now, I can't comment anything more than that. Yeah.
Just one more question on the laptop bit, right? The global tie-up that you will announce. Will this big one of the big three help you set up this capacity? Will they co-invest along with you for this production line?
No, we will be making the entire investments of 250 crores over a period of 6 years. That will be both on the panel manufacturing as well as backward integration, because that's being structured under the PLI. And clearly, in the next 6 to 8 months, we look to set up these capacities, and there'll be a ramp up and stabilization phase. Yeah, but by next financial year, I think so we'll start showing the revenues.
I remember the third name, Lenovo. Is that correct? HP, Dell, Lenovo, right? Those are the big three. That much you can say.
Those are big three, right?
Okay. All right. Well, just leave us with some numbers on what the next couple of years would look like on the top line, right? You're sitting on a base of about 12,000, 13,000 crores of revenues in FY23, which was a growth of 15%. Where do you see your revenues go to in FY24, FY25? What kind of reasonable top line growth are we looking at?
So, Sonia, we have really acquired large customers in mobile category and also in other categories. Clearly, we are sitting on a really large opportunity, and both IT hardware and mobiles will be the largest tickets for our growth. So we can clearly say that we'll have aggressive growth starting H2 of this financial year and even bigger growth in next financial year. I don't want to pinpoint a number, but it will be significantly larger than the industry growth, both industry as such, electronic industry, and also the EMS industry.
All right, so our final question, on the top line, you're not giving us too much of color, but maybe by the end of this quarter, we'll get further details with regard to your guidance for this year. But on the margin parameter, I wanted to ask you, since your mobile division is going to lead growth, I think last year it was around 5,300 crores. This year, I guess it goes up drastically, and from there on as well, it moves up. So if you could tell us, how do you see the mobile segment growing from on a base of around 5,000 crores, point number one. And for the overall scheme of things, want to dilute margins? Is there a risk to that 4.5% margins since mobile is going to lead the way?
Yeah, so Nigel, clearly you are right. The mobile is a lower margin business for us, both in terms of gross margins and EBITDA margins. But clearly, if you look at the market levers for us, one is that we think the operating leverage benefit has played out in certain verticals. It will play out in more verticals. We are continuously migrating more and more to our own design solutions. And clearly now, from here onwards, we'll focus more and more on creating a large component ecosystem through a lot of partnerships. So those will help in those will help in driving the margins. But yet, yes, mobiles and IT hardware will be lower. But we still hope and we are confident that I think so 4 to 4.2% margins should be achievable for next couple of years.
Okay, we will let you go on that note. All the best. 4 to 4.2% margins achievable for the next couple of years. Got that. And, all the best for your new orders, all the new segments that you're getting into. We hope you continue to thrive. That's Dixon Technology, by the way, has been a big mover back at 5,100, 75% rally in the last 6 months. Another company on our radar is Angel One. We'll talk about that. Prabhakar Tiwari of Angel One will join in to discuss the business update for the month of August. Stay tuned.
Okay, welcome back. This is Corporate Radar. The market's doing just fine. We've got decent gains coming through on the Nifty, 0.25% once again. Slow and steady, and then, it's slow in the first half and then usually picks up in the second half. That's been the experience the last 2 or 3 days. And this is just the first hour, within the first hour that we are in. So 19,775 on the index. Now, broking firm Angel One is in focus. They saw a decent rise in a client base in the month of August. Total client base improved by 4.5%. Gross client acquisition zoomed by 19% on a month-on-month basis. Let's talk about this and more. We've got the management of the company joining us. Prabhakar Tiwari is Chief Growth Officer at the company. Prabhakar, good morning. Good to have you with us here. I mean, I guess for brokers, there can't be a better growth environment, right? In terms of demat accounts, I think when we'll put this out later, 10 crore demat accounts. So it's been on the up and up. But let's drill down to your business. For you, when I look at the last numbers, gross client additions have hit a new high, but your overall market share has remained absolutely flat month on month. Could you tell us why is that so?
Yeah, so good morning. Yes, that's a great time. A lot of points in the market.
In terms of market share, I think these are like temporary phenomena. I believe we already are on a high market share. And if you look at it on a commodity, we have gained by 82 BPS. And on cash also, we are making a lot of movement. So in coming months, you will see a lot of action here from our side.
Okay. When you talk about action, can you tell us the gross client additions, right? I mean, in this quarter gone by, it hit new highs. In August, the gross client acquisitions was at 7.3 lakhs, which is a growth of around 46% year on year. On this base of 7.3 lakhs, how much do you think you can take it up by over the next couple of months? What's the average growth that you're looking at?
Okay, just one correction. It's a 65% growth year on year. My team will feel bad about that lesser number, but fundamentally, a lot of good work is being done. Our super app product strategy is working. Our NPS has gone up by 2x in last 6 months. And our direct mutual fund business, you could already see as 2.4 lakh unique SIP. So a lot of new people are coming who are SIP only or SIP first customer. And we are committed to increase our organic business by 5x this year. So I would expect that, we'll have similar growth momentum going forward. The rest will depend on how we execute and how the market environment is.
All right. Hi, Mr. Tiwari. Good morning. What about the order book, the order run rate per day, trading day? I think it's around 5.2 million approximately. I think that's been more or less constant. Are you seeing any kind of signs of slowdown? Do you expect to continue at this sort of a run rate?
Yeah, that's possible because see, what happens is that, once you focus on being a transaction platform and you focus on the important product features and you keep on your new feature addition velocity, eventually the ease of transacting your platform will go up. And many of the customers operate from 2-3 different apps, and for different segments or for different reasons. So when they see that one single app fulfills a lot of their requirement and is able to give them a great experience, they shift their order volumes to that platform. So we believe with a super app in place, we will see traction there going forward.
Prabhakar, with this change in expiry days, right? We got an expiry happening pretty much every day of the week now. As you see it, is this going to lead to significantly higher volumes or your thoughts on that? One. And second, my colleague Yash was picked up from sources and that SEBI is now working on 1 hour settlement, right? I mean, that's the aim. T+3, T+2, T+1, now almost instantaneous settlement. If that were to start to happen, what's your assessment? I mean, what will that do to volumes?
If you look at it, there are financial products for a reason, and they have a role to play in the market, in terms of market building and a lot of other such things. And expiry dates are decided basis a lot of consideration. And because we want to, there are customers for such financial products. So in my opinion, everyday expiry, will be helpful. There could be an impact, but eventually it depends on, which segment of market get impacted. If there is a net positive or it's a zero-sum game, like, some of the expiries will impact other expiry volumes. That is very tough to comment right now. But fundamentally, given the fact that we are becoming more mature market, this should be good.
What about the settlement bit?
That should be good, and kudos to our regulator. They have been very forward-looking. They have been increasing liquidity in the market, and we welcome it. We are prepared, like rest of the industry, to support whatever new guidelines which come in this area.
Okay. Mr. Tiwari, the client base, the incremental client base for Angel One is coming in largely from tier 3 cities with a median age of 29 years. So that's a very interesting take, right? How there's this rising urban middle class and how there is a lot of financial inclusion happening over here, as we were talking about the 10 crore demat accounts. Can you tell us what is your client acquisition strategy? How do you plan to target this whole millennial Gen Z piece? And what kind of growth are you looking at here?
See, we have a very well-diversified channels in place. In paid performance marketing, we have an engine which is very, very efficient, very state-of-the-art. We have a huge referral channel. We have been increasing our organic channel. This year, we want to take it up by 5x.
we have assisted channel through B2B, and we have a DRA channel in place. See, fundamentally, this entire acquisition strategy depends on how you can reach to inaccessible pockets of the market, and can you acquire customer profitably from there. Because if you look at it from the customer angle, this is organizational angle. If you look at from the customer angle, they have no way of accessing the market, other than their smartphone. And, companies like us who make the smartphone app where it's an intuitive journey, it's like secure journey, it's a speedy journey, eventually they will choose us over others. And that's how I see us growing in future also. More importantly, we are increasing our brand marketing investment unlike last year. So there will be a 6 to 10x increase in our brand marketing spend. We have recently launched a super app campaign. Some portion of the attribution for last month high numbers could be given to that campaign also. And in coming months also, we'll be spending a lot on brand marketing. And this will help us manage our growth momentum and also to reach out to this tier 2, tier 3, tier 4 audience, which are looking for smart solutions.
Correct. Mr. Tiwari, in quarter one, the cost to net income, that inched up, I think, to around 52.5% odd. That was due to higher employee cost. What's the sustainable trend from here on, cost to income?
See, I won't be able to give any forward guidance number on that, but let me tell you that we are growing as an organization. We'll be getting into lending business before the end of the year, and we will be getting into AMC business very soon. And we are hiring a lot of new people in the management. We have Mr. Nishant Jain, who has joined us as a Chief Business Officer for our assisted business. And we have Mr. Ravish, who has joined us as a CPTO. So it will be not right to look at our cost to income ratio from the angle of existing business. You also need to understand, the kind of more diversified business we are trying to build.
Okay. All right. Thanks a lot for joining in and all the best. That's Angel One with, their Q1 numbers and the way forward for the company. By the way, for the market, we are not too bad, actually. We've seen a growth of almost about 40 odd points today, and the Nifty holding on to 19,780. Let's get you a CNBC-TV18 exclusive. We learned from sources that PB Fintech wants to become a reinsurer. Yash Jain has all the details for us. Yash, what are you picking up?
Well, Sonia, in the last 1 year, whatever we've spoken about PB Fintech, of course, we've spoken about the improving profitability and business, but we've also largely spoken about the headwinds which the company faces, be it in the form of a parallel insurance aggregation platform from the regulator in the form of Bima Sugam, or, companies looking at more and more direct sales. It is because of this headwinds that the company essentially needed an alternate business channel, largely to diversify its business and raise more revenue streams. What we've been given to understand from our sources is that PB Fintech has started exploring options to get those new revenue streams into its business. What we've been told by our sources is that the company, from an insurance aggregation platform, is now looking to enter the insurance manufacturing space. Insurance manufacturing space is nothing but when you have your own life or general insurance or health insurance products. Also, what sources tell us is that PB Fintech intends to start or enter the insurance manufacturing space firstly from the business to business market. That will be reinsurance, that is reinsuring the insurance company's products, and then eventually looking at general insurance market and later on life insurance market. As far as the general insurance foray is concerned, what we've been told is that the company has had a few informal conversations with the regulator to understand the space, to understand what would be the foray into this particular market. Also, it has sort of onboarded legal consultants to help the company prepare for this big foray. As I said, the company currently is into insurance aggregation, where these products are listed on the platform. And now, with all these headwinds coming in that business, the competition intensity increasing, is also looking at insurance manufacturing to start with the reinsurance business. Later on, also look at general insurance and life insurance market. We've written to PB Fintech on this particular development. A response from the company is still awaited.
That's a big story, important story. PB Fintech, I mean, that'll, if they do this, this will change the face of the company. Yash, stay with us because we have Madhukar Lada of Nuvama Institutional Equities, who tracks the sector as well. So if you want to join in for a question or two. Madhukar, good to have you with us here. You heard my colleague Yash detail that story out. PB Fintech not happy with just being a distributor, aggregator, but wants to get into the business for themselves. What do you make of it?
line or call later.
Okay, I think right at the moment we lost that time, but we'll have him back. Yes, just a quick one if you're still there. This is very preliminary, right? I mean, and the discussions with the regulator have been at a very early stage. What does that mean? I mean, are they asking whether we should apply? Or is the application process already underway? Go on.
Correct. So you very rightly pointed out it's at a very early stage and the conversations with the regulator sort of revolve around the fact that they are an insurance aggregator platform. Is there any conflict of interest that comes in the way, or if that way is cleared for them? Also, the insurance regulator made certain amendments to the reinsurance market very recently, reducing the minimum capital required to start the business from 100 crore to 50 crore. Of course, changing the order of preference as far as the sector is concerned. So understanding all those nuances from the regulator, how does it benefit the company, in what way does it benefit the company? Also, one point which I missed earlier is that it wants to, at this point of time, the intention so far is to start this reinsurance business by itself, which is not to have any partner in the company initially and start this business by itself. It has cash on its books to sort of deploy as far as the gestation period is concerned. And then later on, when the business reaches a particular stage, then sort of look at getting a foreign partner or an Indian partner as far as the business is concerned. But initial conversations with the regulator to understand the space, to understand the recent changes which the regulator has made, to understand any sort of conflict of interest for a better entry to the foreign.
Okay, Madhukar is with us of Nuvama. He tracks the space. Madhukar, what do you make of the story?
Hi, good morning. So I think, PB obviously has a lot of data available to it in terms of, what sort of customers profiles are, their demand is. And I think they can also help in designing of products. So over here, I think what they'll try to do is make more white label products with insurers and basically provide insurers with reinsurance capacity behind the scene, right? And rather than spending a lot more on going directly to the consumer, the cost in this business will be limited because you're not spending that much on branding, marketing, etc. And you get some portion of the risk and some profit of that risk that you take, while as you sort of underwrite that business and you provide some reinsurance support to your general insurance partners.
Okay.
And
Madhukar, you don't see any? There's no conflict of interest, right? I mean, they can be an insurer and then kind of distribute the products as well, right? I mean, it's not as if on their platform they have all insurance companies. I think they don't have one or two big ones.
I don't see a big conflict of interest over here. Okay. Because they can be a distributor and a reinsurer.
Sure.
Right?
And does it say anything about their existing aggregation business, that they feel the aggregation business, because of Bima Sugam, etc., is under threat, so they need to sort of move into this? Is that one way to look at it, or not really?
Not really. I think it's just a case of in forward-backward integration into the insurance space. And I think on the new business side, PB reported strong growth even in the last quarter. And my sense is Bima Sugam is still some time away, and insurance is still a very push product. So I would not read too much into Bima Sugam at this point in time.
Hello, Madhukar. This is Yash here. Thank you for taking the question. My question to you is essentially, not on the conflict of interest, but as far as the current business is concerned. There are life and general and health insurance products which are listed from various companies. Let's look at the scenario where PB Fintech looks at becoming a manufacturer in the general insurance business or life. Not conflict of interest, but does that sort of impact the current aggregation business? Do you see a threat of these life general insurance companies coming forward and saying that, listen, we are on your platform, You have your own product on the same platform. There could be a preference, there could not be a preference. Do you see that sort of conflict coming in from the existing players on the business and impacting the existing business?
That is a possibility if you become a direct sort of manufacturer and a B2C sort of player for general and life insurance. That is definitely a possibility because, you will have access to a lot of these platforms and products and sales numbers, those sort of things. So other companies may not like it that much. But as far as the reinsurance business is concerned, I don't see that being a problem.
Okay. All right. Madhukar, it's a pleasure. Thank you very much for joining us with those inputs. Yash, thank you for joining us with that story. It's an interesting one. Changes the profile of the company from an aggregation platform as we all know it. Policy Bazaar, of course, synonymous with a platform which aggregates these policies and products. Thanks very much. We'll take a very quick commercial break here. On the other side, we'll shift our focus to the commodity segment. Manisha is going to be joining us with exactly that. Stay with us. Back, we've got the market, which is up about 0.25%, 1/3% or so, looking good. Mitesh is with us with what you should be doing now on the Nifty and then individual stocks. Mitesh, hi, morning.
Yeah, Prashant. So I think on the back Nifty, around 45,000, taken some profits off, trailed the stop loss now at 44,770 odd levels. And once we start getting past 45,050, then the Bank Nifty could even head towards 45,320. But as I said, there is a news flow hanging over it, so let's see. And on the stock side, I have a buy on Bajaj Finserv, which has given a good breakout today. So that's a buy with a stop at about 1535 for targets of 1600. And the other one which I like is Chola Finance, which I would recommend buying with a stop below 1134 for targets of 1190.
All right, Mitesh, thanks a lot for that. Well, let's do one thing. Let's also get a quick handle on what's happening in the world of commodities this morning. Manisha is joining in. Manisha, what's the one commodity that you're tracking today?
Well, I'm looking at the silver prices because they have been very, very volatile in the last few days, and silver clearly seems to be underperforming the metal space. It's slightly confused with silver, because it's part precious metal, part industrial metal as well. The kind of demand that industrial metal from the industrial side that the silver sees also seems to be stalling a bit. So while we have seen all metals decline for this week, silver has fallen by 6%. And when you look at the year-on-year basis, we still are 24% on the higher side, though. This is what silver has done in 2023 until now. We started the year positive at $23.9 per ounce. We saw a sharp decline in the month of March below $20. 26.10 has been the high for silver for this year, and currently we are trading at $23 an ounce. Also, let me tell you on what silver has done in sense of range in last 3 or 4 years. So when you look at the charts from 2020 onwards, we've seen silver prices hit a high of 28.5 and a low of 12.5. So clearly has been a very big range for the last 3 years itself when it comes to silver prices there. Also, when you look at an all-time high for silver, that was in 2011 at $48 an ounce. So trading at 23 right now, we are half of what silver perhaps is capable of if we see all of that industrial demand do come into the markets there. Talking about that, this is what we've done in sense of industrial demand in the last year at 556 million ounces. And for this year, the anticipation is that we could be hitting a 550 million ounces as well. For silver, the strength also comes in from the fact that this is going to be a third straight year that you are looking at a global deficit, and that too at record levels. This is the forecast for 2023 for silver going forward. So World Bank, Bank of America and Trading Economics all believe that $21 to $23 an ounce is where the silver prices perhaps could average. There is bullish cues though coming in from Citi and Investing Haven, which also believe that $30 an ounce on the higher side could also be crossed. There are, of course, some ifs and buts here in sense of dollar index, Chinese demand, etc., and that would move the prices going forward.
Okay, thanks a lot for that. Well, I'm also looking out for some stocks. So let's pick them up. Landmark Cars, the stock is up almost 6% today. And if you pull up Landmark Cars in the past 6 months, the stock has seen a big rally. It's up almost about 40% in the past 6 months. Now, it's signed a letter of intent with Mahindra & Mahindra for opening new dealerships in West Bengal in the Howrah region. And the dealerships will engage in their key business, which is the sales, after sales of all of Mahindra's brands, their personal vehicles, the pickups and the Supro range of vehicles as well. So it's additional business for Landmark Cars, signing up of new dealerships, especially for Mahindra's personal vehicles, which will be in the which are the new products that Mahindra has launched. So good business for them coming through, and big move in the stock as well, up almost about 40% in the last 6 months. Let's slip into a quick break. On the other side, our special segment, It's the Economy, will put focus on whether the RBI will end or continue the incremental CRR. Lata will be speaking with Samiran Chakraborty of Citi and A. Prasanna of ISEC PD on what the RBI might do. Stay tuned.